watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. Just ahead on this special edition of First Business, a walk down memory lane. Traders tell us their favorite plays of the year, plus the stocks that could have a strong start in the new year. One of the most successful life coaches of all time shares his wisdom on how to play the stock market like a pro. Federal regulators could snuff out the nation's last standing cigar factory. And in Traders Unplugged, down but not out, the guys tell us the lovable loser stocks they'd buy now. To get the show on the road for today, James Romali of Option Hacker is standing by at the Chicago Board Options Exchange. Good morning, James.
Good morning.
What's your favorite stock this year?
Right, so one of my favorite stocks this year has been Home Depot. The stock has been incredibly strong and continues to move higher every single time they report earnings. Now, they had one bad quarter where they saw the stock move lower in this most recent report because of uncertainty surrounding the costs of their data breach. I think that move lower was way overdone and presented a great opportunity for a buy in Home Depot. I'm long the name and will continue to be long it through the beginning of next year.
If you are going long, it sounds like it's not too late for investors to get in on this stock.
No, I think this stock is going to head higher. They have a lot of earnings power, a lot of earnings potential, and besides this one little blip on the radar here, I think it is going to continue higher.
What's the most frustrating stock in the minds of traders this year?
Right, well, I think one really interesting name has been Google. It's completely failed to participate in any of the new all-time highs that we've seen the S&P make every single day this year. One in every 5 sessions in the S&P was a new all-time high, but we saw Google spend a lot of this year in negative territory. It trades at a very high multiple, but again, this is a company with a whole lot of earnings power that just for some reason is being completely ignored by investors in this market, and I do think that may present an opportunity.
Why are investors shying away from Google?
Right, so I mean, like I said, it doesn't make a whole lot of sense here because of all the earnings power that the company has. I think there's probably a lot of money that rotated out of Google and maybe into names like Alibaba and Apple, but I do think that because of that type of price action, there is going to be an opportunity for investors to pick up some Google at a discount going into the next year.
Awesome to have you here. Thank you, James.
Thank you.
Chuck Coppola is ready to go this morning with a report on manufacturers who want to stamp the words "Made in the USA" on more products. Good morning, Chuck.
Recently, President Obama announced executive orders to address immigration. House Speaker John Boehner called his actions lawlessness. Earlier, the president also took executive action to help manufacturing in the U.S. And though few deny domestic manufacturing could use a boost, some in manufacturing say tax reform would be more useful. Some of the more than 200 manufacturers preparing to open a trade show in suburban Chicago shared mixed opinions of the president's boost for manufacturing.
I think I'd first talk and think about incentives for bringing the manufacturing back, and think about the taxes that need to change.
Hutzel, who's worked in manufacturing for 50 years, co-authored a book on reshoring manufacturing with Dave Lippert, president of an Ohio caster company.
In our company, Junior Achievement just ran a tour of 8th graders just last week. I had them for 3 hours. It's for probably all 12 of them, their first and only introduction to manufacturing, what it is, what it looks like. That doesn't happen enough.
Monday, the president announced executive orders to help manufacturing. $300 million to encourage development of new technologies and equipment. $100 million for apprenticeship programs, and $130 million to help small manufacturers partner with universities to bring new products to market.
Our GDP right now for manufacturing, I think the latest number I saw is 12%, 12.5% of the American GDP is in manufacturing. I think there's a real chance that we can push that up to 17, 18%, maybe more.
United Steelworkers International President Leo Gerard said this is the first president in 16 years to bring together people from business, government, academia, and labor to talk about the future of manufacturing.
I don't think you can do a better investment than to invest in training, invest in skill development. And that, I think, would work much more effectively than just a scattershot tax incentive to employers, which may or may not actually raise the skill level of not only their current employees, but trying to bring new people into the field.
One beacon of optimism, the Philadelphia Federal Reserve's manufacturing report released this quarter. It came in at 40.8, more than double expectations and the highest reading since December 1993.
One of the fastest growing areas in U.S. healthcare is visiting nurses and other workers who treat patients at home. The challenge is making that healthcare affordable while also paying a living wage to caregivers. Paul Eggers has more from North Carolina.
With the baby boom generation just beginning retirement and medical advancements keeping us alive longer, the aging of America presents a big business opportunity.
We've grown pretty dramatically. We started with just a half a dozen caregivers, and now we have about 75 caregivers in this area.
Robert Patterson is a franchise partner with Seniors Helping Seniors, a home health care provider where younger seniors provide non-medical assistance to more elderly clients.
We charge $20 an hour, and that doesn't sound like very much, but when you multiply it by 4 hours a day, 5 days a week, 4 weeks a month, 12 months a year, it can be a big number.
Of that $20 an hour, half goes to the caregiver, which is actually $1 more than the $9 an hour median wage paid by the industry nationwide. Ruby Kay earns about that doing light housework with another home health care agency.
Is it livable? Basically, no.
Though the Fight for 15 rallies pushing for better pay have focused primarily on fast food workers, home health caregivers have also joined the movement. But higher wages for caregivers means higher costs for retirees, putting added strain on already stretched retirement accounts.
I don't know what people are going to do for retirement.
The cost of long-term care is one that often goes neglected, even for the adult children managing their parents' welfare.
I don't see them running to the local agent to get long-term care insurance for themselves, because now's the time to do it when you're healthy. When you get to be 80, you can't buy long-term care insurance. You got to do it early.
Asheville, North Carolina is consistently ranked among the nation's top retirement destinations. How this city then tackles problems related to home health care may set trends for the rest of the country to follow. Reporting from Asheville, I'm Paul Eggers, First Business News.
Pay for home health care workers is a hot topic in Washington. The Labor Department postponed enforcing its own rule requiring caregivers to be paid overtime and travel time. Republicans want the rule scrapped altogether.
Federal regulations may send the nation's last standing cigar factory up in smoke. Jackie Keenan rolls out the cigar saga from Tampa.
For more than 119 years, this factory has been making the same sounds, smells, and is rolling off the same product. This is the J.C. Newman Cigar Factory in Tampa, Florida. But the company may not be making these signature stogies much longer.
It would be very devastating if they had to close.
The FDA wants to impose stricter regulations on cigar makers. This small factory, which employs 130 people and makes 11 million cigars per year, would be subject to more inspections and testing on new products. Third-generation owner Eric Newman says it would be too costly. He says the factory survived the Cuban trade embargo, smoking bans, and taxation, but it may not survive this.
They would require 5,000 hours of testing for nicotine, chemicals, drugs, analysis, and it'd be impossible. We'd have to close this factory.
The Newman Cigar Company makes 7 different brands of cigars out of 4 factories, 3 of which are in developing countries. So if this factory closes, the company lives on, but the heritage of Tampa's past dies if this factory is silenced.
If it gets too tough, we'll close the factory because then we just make everything offshore. But I don't want to give up. Cigars are to Tampa like wine is to Napa Valley, like Detroit is the Motor City, we're the cigar city.
Tampa was once the cigar capital of the world, home to more than 150 factories at one time. The demise of the cigar industry here started in the 70s. One by one, they relocated to other countries or shut down for good. Wallace Reyes shuttered his factory after a big tax increase in 2009. He says the industry in Tampa will be gone forever if the Newman factory closes.
The production of cigars, it was the last nail in the coffin.
Newman wants the FDA to view his cigar as a premium product.
Premium cigars, they would consider exempting from regulation. So what we are asking FDA is to treat us like a premium cigar.
Now Newman must wait and see if the last standing cigar factory in Cigar City can be saved. For For First Business News, I'm Jackie Keenan.
The FDA is reviewing 82,000 memos that were sent to the agency protesting the new regulations. The decision is likely in 6 months.
Still to come, why a trader says the new year could be all about the USA. In Traders Unplugged, the guys are split on the state of the stock market. Is it doomed or about to boom? And after the break, business besties. Which companies top this year's list of the best places to work? Google is back on top of the Forbes list of best companies. Each year, Forbes ranks standout companies based on pay, health benefits, and donations to charities. For the 5th time in 8 years, Google is #1. This year, the tech giant hired more than 4,000 people. SAS, an information tech software company, came in #2, followed by the Boston Consulting Group, Edward Jones, and Quicken Loans. Bill Mahler joins me now with easy steps to success for anybody.
Tony Robbins is a master motivator. If you've ever been to his professional development events, seen him on TV, read his books, if you're a CEO or a star athlete who's been coached by him, you know he has this irrepressible drive to get people to kind of break through self-imposed barriers and transform their lives. Well, this best-selling author has authored a new book, Money, Master the Game. It's been endorsed by several important, influential people, including Steve Forbes, who says it's a book that is a gold mine of money-making information. Let me ask you about this. In wealth and success, which you're an expert at, is it, in fact, a barrier that holds most people back? What is it about us that we're not? Is it the wrong information, the wrong attitude?
I think it's complexity. You know, most people have a day job, and a day job has many areas. You're trying to be a great parent, a great business person, great everything, and then I'm supposed to tackle this area called investment. And the industry makes it so complex, the language, everything, because the more complex, the more likely you just give me your money and then I can charge you fees you don't understand. So what I decided was in 2008, when I saw so many people suffering, I grew up very poor. I mean, car disappeared, and it wasn't because somebody stole it, it was repossessed.
Alcoholic parents, I mean, you had a lot of
no money,
challenge.
no food. So when 2008 happened and people were losing their homes en masse and you were seeing people losing half their wealth, and I knew it was because the system was manipulated, it made me crazy angry, and I want to do something. So most people don't know it, but I've been working with one of the top 10 financial traders in the world for 21 years, Paul Tudor Jones. And Paul has not lost money in 21 years. And I'm monitoring every day what he does for 2.5 decades. So I was there in the middle of the tech crisis in 2000, the crash, 9/11, 2008. He made 28% upside in 2008. So I said, if I interviewed him and 50 of the smartest people on the planet, self-made billionaires, Nobel laureates, and I could simplify it so I could teach any investor what to do, it'd be a worthwhile venture.
All right,
So
it says 7
4 years.
simple steps to financial freedom. I always get suspicious when I see that because life isn't simple. There's a lot of heavy lifting. There's a lot of setback and doubt and fear and failure. Is it simple, though, really, to become financially free?
It is simple. Einstein said, make things as simple as they could be, but not simpler. And so, the first thing that most people don't do, they just don't get in the game. They don't get started. They own an Apple phone, but they don't own Apple. It's just crazy. We're not owners in this society. We're consumers. So I show people really what that means and how a small amount of change can change all that. As an example, most people understand compounding. But when you ask Warren Buffett, what made you wealthy? He says, living in America where the opportunity was, living a long age because I had good genes and compound interest. There's a UPS driver named Theodore Johnson, started out with never made more than $14,000 a year, and at 70 is worth $70 million. He just applied some of these simple principles.
Money, master the game. Thank you very much, Tony
Thanks
Robbins.
for having me on.
Coming up, a legend from the trading floor gives his prediction on the next moves in the market. And in Traders Unplugged, is bubble trouble brewing again in Techland? Time now for Traders Unplugged. Alan Uckman and Scott Shality are ready to go a few rounds with two very different views. Round number one, guys, winners in losing. Pick a play in a company that keeps losing money. I'll give you one stock, Tesla.
Well, there are a lot of stocks that are based on potential, not necessarily what they're doing, their performance now, but what they could do in the future. I guess I've been told that a few times in my own life. But if you look at some individual stocks, I like Wausau Paper, Arch Coal. The coal sector is coming back with all this perception that their regulatory relief is here. Ride 'em cowboy. And my last one here is Allscripts. Allscripts, I think, is going to benefit from this health explosion as people get older.
I like the idea of the healthcare sector. I went with Momenta Pharmaceuticals. It technically sets up for about a 20 to 30% rally from where we're at right now. I was going to do the coal thing, but then I thought, no, that's really not going to work out. But then he did it, so I'm glad I didn't do that. So I'm going to go with Momenta Pharmaceuticals because I do think that we have the next big innovation is going to be in the
But what about the concept that these companies don't make any money?
Well, that's a problem, but at the same time, I think that the research and development that's going to come out of the healthcare sector, I want to be involved with something like that.
Round number 2, .com 2.0. Tech mergers are hotter than in 2000. What does this signal?
Probably signals that the wealthy are getting wealthier, and that's not good, and we should tax them more. I mean, what is it? It doesn't signal anything.
You've been saying .com bubble for how long? And I say 5,000.
No, I'm saying the mergers are bad because they don't have anything else to do with their money, so they're merging. It's not good for jobs.
They're buying growth. What they're doing is stocks are buying growth. They can't create it themselves, so they're acquiring growth.
With overvalued stock.
Okay, that could be a problem eventually.
Yeah.
I'm here yet.
So here we go. I'm Facebook. My stock is ridiculously high. I'm going to go out and spend it while it's high. That's great for the economy.
But it helps them build revenues, which build earnings. It builds earnings.
Be careful, Alan. The world's going to end over there. It might fall off the side.
Round number 3, reversing course. Gold, the dollar index, and the euro currency all made new extremes and reversed course in the latest weeks. What does that mean?
It means a lot. It means the dollar rally could be stalled. And if that happens, energy prices stop going down, that particular sector of the stock market stabilizes, and if it even starts to play ball a little bit, guess what? Stock market high.
It was never going down, though, is it?
High. The energy sector's been a drag.
Do you know what those things mean to me? That the world is okay again. The dollar's stronger, the euro getting weaker, and who cares about
the euro stopped going down, the dollar stopped going up, so that's reversal.
No,
that's called a key reversal. New highs and lower close.
The world is okay again. Those things are doing what they're supposed to be doing. That's what I say.
Gold above $1,200 an ounce. Who would have thought?
It's 40% unemployment in Europe,
Who would have
and how's the euro stronger than the dollar?
On to the bonus round question for today. Ticker time. Which one is the phony winter-themed ticker? Is it A, snow, S-N-O-W, B, skis, S-K-I-S, C, ice, I-C-E, or D, flake, F-L-A-K-E?
Flake.
F-L-A-K-E. Yeah, it's too many letters.
No, it's not too many, but it's flake.
The answer is flake.
See?
All right.
It's got the right answer
now
right.
I'm scared that we agree.
Got the answer right. We were both right. That's never happened in months.
It's the holidays. You're feeling very good. Thanks for coming on the show.
Thank you.
First Business continues right after this. Trader Ira Epstein of the Lynn Group joins us now. And Ira, I would love to hear, what have been some of your better trades this year?
The ones that trend, which are pretty easy to figure out. Let's talk the stock indices. It's been pretty much a one-sided game for a number of years, but this year's just been stellar. And if you've played the market and were able to buy the breaks, that's worked. The other trades that I'm watching are currencies. I think they're the best trending, other than the stock indices this year, of the markets. And the dollar looks to me like it's going to stay strong. So I'm looking for next year to even look for a further gain in the dollar, at the peril, of course, of what goes on in Europe and watching what's going on even in China, which is slowing down. I mean, we're at the other end of a cycle that they're not at. We're at the end where our labor markets are getting better. They may not be great, but they're getting better. But lack of inflation, well, that's scary, because as the other currency markets sit there and the banks pump in the money, and by the time we get into next year, we should see the European Central Bank going completely wild in it. And I'm looking for them to even buy sovereign debt, even though some people say they can't do it. I think there'll be no choice, and I think the dollar will go up on that.
There are some stocks that you would pick. Is anything on your list?
Well, going in at this time of the year, I'd certainly like to look at FedEx and companies like that. The online retailers. I know that people, retailing's been out of favor, but this is the heart of the season, so I'd look for the market to anticipate good news, and then at the end of the season, I'd probably tell people, come out. I think that in the first quarter, maybe the second part of the first quarter, the market is subject to a break. You're going to get profit taking. You're going to have a certain amount of window dressing going into the end of the year. So I'd be a little cautious then and look for the market to plateau out. Nothing goes in a straight line unless people get so scared abroad that they just feel they got to own anything American and convert their money into what? Dollars. And people don't realize it. If you look at the European companies, you have no idea how many of them are buying American companies. They're taking them over. They've got low interest rates. They can borrow very effectively, and they're coming in and they're trying to pick up value. And in the essence of that, they're moving out of euro into dollars.
Ira, wonderful to have you here. Thank you for your insights.
Thank you.
That's it for now. From all of us at First Business, we wish you a happy, healthy, and prosperous holiday season.